Good afternoon, everybody. It is the closing bell here at MarketStream.live. My name is Joseph Cusick with the Cusick Group, securities offered by MoneyBlock, and this is June 26th. We are going into the final trading week of June. We're going to enter the July 4th holiday week next week, so there's going to be a lot of slowdown I'm going to expect towards the end of the week, unless we have some fireworks, and no pun intended, sorry about that. But the trading week next week is actually going to be a little bit muted. Monday, we're going to have a half day. Tuesday, we're closed. So today's action, not really much to write home about, except for a few things that I want to basically point out because I think there's some complacency coming in the marketplace. One thing that's notable that you all will, those of you that are watching right now, and those that you that will be catching it tonight, you're going to see the headlines coming by. The CBO, the Congressional Budget Office, just came out with their projections on what the Senate healthcare bill is, the impact. And the first headline that came out was 22 million Americans by 2026 will not have healthcare insurance. DOA. That is what that headline is putting out there right now. I don't think that the 5 senators, Republican senators, especially the likes of Johnson and so forth from Wisconsin, are going to be signing off this before the 4th of July holiday. They wanted to get a vote, get this thing through. But with those kind of numbers, it basically just completely blows up whatever progress was made on the healthcare front. And from a media perspective, from a headline perspective, that's tough. As a matter of fact, I'm looking at VIX right now, but I wanted to bring up XLV. Let's see how that's actually trading after hours. Right now it's trading down about 2 cents. It was down 8 cents today, but you can see that it's been topping right now. This is the Healthcare Sector Super Fund. That's the ETF that you can look at to watch healthcare and see its reaction towards these headlines. Not really reacting right now, but there's going to be a lot more coming out, especially since they're trying to get this bill done before the session recess going into the July 4th holiday. Where I do watch to see an expectation of potentially big fireworks, that's the VIX. We talked about this, and now we see it in single digits. 990 basically trading on its lows for the remainder of today. For those of you that are not aware of or look at or understand what the VIX, it's a fear index. It basically is something that is utilized in the marketplace to give you an idea, a barometer of potential violent moves. The higher this number is, the more higher expectation of potential violent moves, and this has been historically low. As a matter of fact, we are right at historic lows at this juncture in volatility. It doesn't matter what happens in the world today. This is not moving, folks. That tells you one thing. One is that the marketplace is very complacent. In other words, they are pretty much participants are saying, if you're not long, you're wrong. And so looking at that, we'll take a look at the Dow Jones. The Dow Jones is moving to the upside, but it finished off of its best levels today. Couldn't really hold the opening print. You see this little bar over here to the left? That's the opening print, and right over here to the right, that is the closing print. So it finished below its opening, but it did finish up on the day 14. But it pulled back pretty considerably. I was scratching my head a little bit when I'm seeing the Dow and the S&P 500. They were actually performing very well today, but they did finish off of their best levels. But when you compare it to the NASDAQ could never get it going all day. After the open, it pulled back. In full disclosure, I do have my clients positioned in the tech sector, specifically in the Qs, as I've mentioned before and disclosed. But we just couldn't see any upside move in the large cap tech. And large cap tech is basically what this market has been carried on its back. When I'm talking about large cap tech, folks, I'll put it in a perspective. Facebook, Amazon, Apple, Netflix, Google, the list goes on. But there's about 7 to 10 names that this market has been riding all the way up. And those have been struggling, especially Apple. We saw that struggle today. Not enormously, and by no means does it mean that there's a trend shift, but it just means that the bulls just aren't having the catalyst to the upside. The RUT, the Russell 2000, watch that one closely. We saw a weak durable goods orders come in, durable goods report come in, down 1.1%. This is going to maybe put a little bit of a damper on future forecasts as far as GDP going into Q2. And with this healthcare bill looking like it's going to potentially be held up, the more negative headlines that we hear about this going into a potential vote, the less likely that it's A, even going to get voted on, or B, will get passed. Taking a look at the crude markets. Crude markets actually bounced quite nicely today, up 23 cents at 43.40. But I told you this months ago. As a matter of fact, I'll be on television talking about it most likely this Thursday on Bloomberg. But I saw crude basically looking at a sweet spot area of around the $44 level, and that's where we're basically trading around right now. We're going to watch the inventory numbers going into the holiday session, but it looks like right now crude is firming up at the $44 level. If you look at the Brent contract, which is the product that's primarily pumped out of the Middle East, Russia, and so forth, that right now is firming up as well at around $45, up 32 cents. Again, we're going to watch all the headlines that can continue to come out of that space. Gold got hammered today, down $12. You can see this big red line. It challenged its 200-day moving average, but it's well below its 20 and 50-day moving average. For those of you that are new to the show, I look at the 20-day and the 50-day moving average as short-term and intermediate-term support or resistance. That is resistance right now. And so basically when you look at this, you want to look at 1256 and 1258 as levels that you're going to want to watch in gold. If, in fact, gold bugs are going to start moving to the upside, you need those levels to be beat, and with some conviction. Taking a look at, though, copper. Copper's that non-ferrous industrial metal. That's what I use my barometer on, looking at infrastructure plays, thinking about also just the general economy in general. This gives me a pulse both domestically and globally. If copper's moving up, that is usually a solid sign that we could forecast some decent growth going forward. Not the only thing that you would look at, but this one is one that will start to set the tone for things like steel and so forth. So with that being said, it actually pulled back, basically settled where it opened this morning, but still above its 20 and 50-day moving average. We're going to want to watch this one very closely. Bonds. Bonds really acting weird, especially with the fact that we're getting into areas that historically have been an area where if there's going to be some sell-off in bonds, this is it. Now, with that being said, I do have my clients positioned in the bond markets, but you look at TLT, which is the ETF that tracks bonds, it has just been soaring to the upside. Been a bit of a grind, though, for the move to the upside, but today gapped up, finished right where it opened, so there wasn't a lot of overall bullishness in bond prices, but you could see that the 2-year, the 10-year, and the 30-year all finishing to the upside. And when you see these bonds trading at these levels, this is an area, and these are areas where you have to be careful. These are areas like on the 2-year where we actually last time we saw them get up into this area of 155, 156, this is where the market started to take a beating on it, meaning that prices then came down, yields went up. We're going to see if that actually occurs, but we're watching this very closely. And as I have always said, watch that 10-year yield. You can watch that 10-year yield as an excellent barometer of what's going on with bonds, bond prices, and just the overall psyche of the risk-averse market. People invest in bonds because they want to have that fixed rate of return, a little bit of a safety net there because it's also backed by the federal government, which some days now seems like it's maybe not the best stamp of approval. But with that being said, though, that's where a lot of risk-averse money gets parked. And with yields at 2.13%, and you see the yield curve getting closer on the 10-year and the 2-year, to put this in perspective, if you actually look at the 2-year, the 10-year is at 2.12. The 2-year yield curve right now, sorry, I didn't want to do that, is right now, let me just do this real quick. The 2-year right now is trading at, I can't get it up right, I can't get the yield up right now. But if you take a look at the 2-year yield, we're actually seeing that yield compression where the 2-year is getting closer to the 10-year. That is not a positive sign. We want to watch that one very closely. Again, we've got some time there. All right, folks, that is it right now for the closing bell. Kick around the site. Check out the premium content. Check out all the latest videos that we have there. And also, check us out on Facebook. Like us. Start getting the word out. We really would love to have more viewers. We want to grow this out. We have some new things that are going to be coming down the pipeline. And as always, if you ever need any help with your personal financial situation and you have questions about what's going on in your portfolio, or you want to sit down and talk with someone that is a registered advisor, come talk to me. And you can reach out to us through either jcusick@moneyblock.com or at info@MarketStream.live. Info@MarketStream.live. All right, folks, till then, we'll see you tomorrow morning on MarketStream.live. Have a great night.